Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. I've touched on this before, trying to measure Tesla's real market share, given that they are so supply constrained and have a backlog of about a year of cars to sell. This backlog has also likely factored in all the ramping this year, potentially to 2 million vehicles, and has also included price increases, yet it still keeps building up. Hence further why I reiterate not to expect any new models anytime soon. The demand for these models is high enough for Tesla to achieve its mission, rather than having to resort to lower cost models. Tesla haven't even released a standard range Model Y outside of Asia yet, or a Model Y in Australia or Japan, and some people were even talking about seeing a compact model last year. I have been saying a compact model would not be happening for some time, and said perhaps around 2025, but now I would say possibly more like 2028. I think there will come a time when Tesla release a bunch of different versions of consumer vehicles, and the compact will be one of them. It may or may not be $25,000, but either way, it won't be the mass market Tesla everyone thought it would be. It would instead be more like the equivalent of the 1 Series for BMW, or the A-Class for Mercedes, hardly the make or break of the company, and you wouldn't want it to be if you don't have to, as there'd be much less profit per vehicle, especially when you have enough demand for vehicles that have perhaps 3 times as much profit. It just makes more sense to do everything you can to keep building up the demand for those products, and Tesla can build demand for them whenever they wish by simply dropping prices. Of course, they don't need to drop prices anytime soon, but if demand ever did start to drop too much, Tesla could drop their prices. At the same time though, Tesla have likely got their costs down a lot too, so their profit margins will still be great, and every time the price drops another 5%, demand may rise 30%. However, the next 5% drop, demand may rise 50%. Demand rises exponentially when prices drop. Therefore, each time Tesla find a way to reduce their costs by $2,000, then if Tesla wanted to drop the price of the vehicle by that same $2,000 saving, then there'll be demand for, say, 200,000 more customers who can now afford the vehicle. However, if Tesla dropped the price a further $2,000, demand may be a further 300,000 vehicles. These numbers are for indicative purposes only, obviously, but the lower the price becomes, the larger the market it appeals to. Therefore, how do we factor in what Tesla's real market share is? On top of that, the models Tesla are selling are becoming the best selling in various markets around the world. This is where we try and look at it from the 3D chess perspective. Well, a market share of vehicles sold is a 2D pie chart. The thing about Tesla is its vertical integration. And yes, the fact they make their own seats and all of that is great, but also the fact that Tesla own the equivalent of the oil companies and the gasoline stations. Tesla have the supercharger network, along with eventually expected solar and battery power to run them. Of course, Tesla's biggest accomplishment to date will be FSD, and although currently there is a subscription version available and you pay monthly, it might end up becoming a different pricing model later on when it is complete. Tesla may eventually charge somewhat based on miles driven and time spent driving, i.e. if you're doing lots of highway or motorway driving, those miles may be cheaper than being driven around a city, but perhaps the per minute cost of usage might be similar. Anyway, it's possible Tesla will end up charging per usage eventually, perhaps as the only option, or they may still allow subscription too. That might be why it is so valuable to lock in FSD. The question is, will Elon say it in a tweet first, something like FSD is no longer for sale, or will it be FSD is no longer for sale in a week? Will consumers get a warning first and an opportunity to lock it in? I would hope so. A price increase of FSD for about $2,000 is tolerable if it ends up delivering everything it says it will in the next few years. It's when the price gets up to around $30,000 it starts to look really expensive. At the same time, it potentially still offers a lot more value than that, and what a subscription ends up becoming $500 a month. I think Tesla will try to make it as affordable as possible for as most people as possible, but it won't be cheap, and you will feel the cost. Yet it will be worth it, just like how Tesla is outselling every other car, yet the Tesla is about twice the price. Consumers are willing to pay for the value, and that's what Tesla is offering, value. Anyway, if FSD doesn't end up charging per mile, then Robotaxis certainly will, which, if achieved, will generate a lot more profit than FSD anyway. So that is what the real market Tesla is going for. That is the market share Tesla are trying to build. So how big a share can they get? Well, of what market? Robotaxis? Well, probably about 90 to 99%. No? That's still too two-dimensional? We need to go more first principles thinking and think 3D chess. Therefore, I think the market share that Tesla is actually trying to grow is miles of transport. Tesla is aiming for the largest market share of miles driven. The drive may include passengers, cargo, or be vacant. You see, unlike companies such as BMW, Tesla have ways to generate income from all vehicle sales after they are sold, along with all the miles the robotaxis could drive. If we're looking at between 100 and 200 million robotaxis to replace perhaps 1 billion vehicles currently on the roads, I'm going to be axiomatic here and assume rational economic behavior, robotaxis would most likely viably be suited to people with cheaper cars due to the likely higher running costs. I'm referring to cars that are likely older with bad fuel economy due to being less efficient and have regular issues with breaking down that cost money. The thing is though, that these older, cheaper cars, they're also worse for the environment too. The newer cars are not so bad, so it makes perfect sense for Tesla to do everything they can to replace the cars having the worst effect on the environment first, in line best with the mission. Not only that, in places where transport is relatively more expensive and of lower quality, they are hopefully more likely to want to carpool. It may still be significantly better than the equivalent options that are even perhaps 5 times the price, obviously aside from paying 5 times the price and having the robotaxi to yourself. But carpooling will again have more impact on the mission. Therefore, building up robotaxis in these nations could have a bigger effect. Like I said, I hope this is the case, especially in cities with very high traffic congestion. Perhaps the government could even incentivize and Tesla could subsidize carpooling. Anyway, if one robotaxi removes 5 older, likely higher polluting cars, then there could be 4 passengers in each carpool. Then that is 20 older cars no longer required on the road, replaced by 1 robotaxi. And that is potentially 20 times as many miles driven or saved from a regular car, which means 20 times more market share of what Tesla is trying to achieve. The problem is the roads in a lot of these countries are not as good, and nor is the driving. I think it may be a lot harder for Tesla to learn how to drive in India than in the US, but Tesla seem confident they can achieve it, and perhaps the number of robotaxis would dilute the other traffic. But clearly Tesla has a huge potential to leverage so many large assets that are sitting idle for the vast majority of their lives, and we're talking about this time over a decade anyway. If the average vehicle drives 10,000 miles a year and robotaxis manage to replace half of the global fleet, i.e. 1 billion vehicles, then that would mean 10 trillion miles of robotaxis driving with passengers a year. If Tesla made 30 cents per mile, then that would come to $3 trillion a year. Okay, we've been talking about robotaxis in the last few videos. I've run off similar rough ideas of how much profit robotaxis could make in various scenarios. One other was also $3 trillion, and one as high as $6 trillion. Either way, we seem to be in a similar ballpark. As for the other billion global fleet, well, we're talking about a time when Tesla has 200 million robotaxis. Remember, I think a lot of these will be privately owned still. I think it's the fastest way Tesla can grow robotaxis is with the owners. But 200 million is a lot, so perhaps we're talking about almost 2040. We would definitely be expecting all new vehicles to be electric by this stage. I mean, just the sheer economics by then, such a lower cost, and of course, it was likely that demand for oil has decreased so much, it's a lot less feasible due to it being harder to get and likely more expensive. And perhaps demand for EV and AVs is much higher than ICE, as everyone wants this new technology. Of course, at the same time, bear in mind we have robotaxis too, which are going to eat some of the new car market. But maybe we could see as high as 100 million EV sales a year, especially when we include how cheap China may be selling them for by then. And there could already have been a couple of 100 million EVs on the road by that stage too, excluding robotaxis. Therefore, I think it's possible we could be just about fully transitioned sometime in 2040, or at least before 2050. I'm just referring to replacing the 2 billion fleet. Gasoline will just become more and more inconvenient and expensive, and more people realize how bad it is, not to mention having to drive the cars yourself. Anyway, because of that, it will simply force all types of vehicles to become electric, but long before this stage, there'll be the battery technology that is necessary, and not just from Tesla, but over time, others will also be able to create batteries that will also meet a lot of applications. And perhaps in 2040, Tesla will only have 400 million cars, 200 million robotaxis, and 200 million privately owned Teslas. And you might say, well, that's only 20% market share of 2 billion, except it's going to be 400 million out of 1.2 billion, as 200 million robotaxis are replacing 1 billion vehicles. Tesla may only have a 20% market share of the privately owned EVs, however, but likely more. Either way, it's not the point. The point is, in this scenario, 400 million of the EVs on the road would be a Tesla out of 1.2 billion, i.e. about 33%. But Tesla's robotaxis would be responsible for 50% of miles driven. And then as for the other 200 million Teslas, they might account for about 20% of the remaining privately owned miles, and that would give Tesla a total of 60% market share of total miles driven in the world. despite only having 33% of the cars being Teslas. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.